I'm here to tell you that the 1% rule in real estate investing is dead. And putting 20% down for leverage in buying your first investment property is largely implausible. And I'm going to tell you why that may not matter. I'm Chris Lindquist, and I'm from the Kansas City area. So that's the market I know best, and that's the market we're going to talk about today as an example. The cool thing is, Kansas City is in the middle. It's in the middle geographically, economically, popular. I mean, we call ourselves the middle. And I'm with Astra Realty. We work with investment sales and property management. First of all, let's set some ground rules of what we're going to be talking about and how we're going to be talking about it. Kansas City is great because we are in the middle, and the United States housing situation has been amazingly resilient. Time after time, the doomsayers come in and say the housing is going to crash, the housing is going to crash. Well, I'm here to tell you, as a working agent in the 2008 Great Recession, what we found out was that if you bought on the worst day of 2007, the highest day in 2007, by 6 years later, you were made completely whole. And if you're going to be investing in a property on the buy and hold strategy, which is what we specialize in, then what you need to understand is you need to be buying it in an 8 to 10 window at a minimum. So think about this as a long-term bond, all right? So that's part of the ground rules. The other part is I'm going to be using Olathe, Kansas, which is my home city, and it's a southwest suburb of Kansas City. The in Kansas City is a metro area. Our median home sales price in June of 2025 is $305,000. Joco, though, Johnson County, which is that southwest area of Kansas City, where Olathe sits, is at $449,000. Now, to put this in perspective, right now, in the United States, the median housing cost is $440,000. In Washington, D.C., it's $740,000. And in Los Angeles, it's $847,000. Now, all of those numbers are rounded up or right there close. So, but that gives you an idea of the kind of market we're talking about here in Kansas City. Now, I want you to see this slide because this slide is going to show you that historically across the United States, and Kansas City is right there. I mean, if you look at any 25-year period of Kansas City, it'll show the same thing, that long-term appreciation for housing is about 4.0%. In Kansas City, I find it to be about 4.1. That's a big deal because that outpaces US inflation. I want to show you a house that came on the market yesterday. I want to show you the location of it because I don't want to be accused of marketing somebody else's listing, but I want to show you the location of a house that's just really a few minutes walking from my own house. It's in the bell curve of Johnson County housing, certainly Olathe housing, in that it has 4 bedrooms, 2.5 baths, 3-car garage. And it came on the market yesterday at 425,000. And I figure it's going to cost at least $430,000 to buy it, and then you'll pay your own closing costs. So I'm not going to do all the math for you today on this video. I've done that in other videos that I can link to down below, but I want you to see this sheet. This sheet basically is an investment worksheet that we go through almost every time we sell a property, and it tells us what the expected returns for 1 year would be based on our current market knowledge. And when you look at this sheet, I just want you to zoom down to that second column there where it says return on investments with appreciation, and it says 12%. Now notice, if you look at the line above that, it's only about 3.2%. And if you look at cash on cash, it's only 1.2%. If you're buying in the Johnson County region of Kansas City, the game is appreciation. The game is the long-term buy and hold. If you want more cash flow, we're probably going to move you to different areas of the metro and most likely over to the Missouri side to increase that cash flow. What I've generally found, though, is there's an inverse relationship between cash flow and appreciation. So if we raise your cash flow, we're probably lowering your appreciation. And for those of you that would like to see me do a Missouri property in the $250,000 range and give you the returns and what the down payments would need to be over there, I would have you go ahead and write in the comments that you would like to see that in Missouri. And heck, if you even have a city in the Kansas City area that you would like me to pull the sample property from, I'm happy to do that. Just leave that in the comments. So as you can see here, you're going to get a 12% return if we get that 4% appreciation, which is the historical average. It's been pacing way above 4%. And this year, so far, year on year, we're only at 2.2%. With limited inventory, it's keeping us at 2.2% because with our interest rates, I wouldn't be shocked if that went down to zero. So it could be zero appreciation, could be four. In 3 years, it could be eight again. I don't know. I can always tell you what things were. We can't tell you what things will be. But in any case, it's usually more secure and more or less stomach churning than the stock market. Now, look, I'm in equities too. I've got my stocks, my bonds, my mutual funds. I've got all of that kind of stuff too. Some of the money that's going to be part of your retirement worth having should probably be in real estate investments. At least that's my opinion. As you would expect as a real estate sales agent and a property manager here in the Kansas City area. So that 12.1% return or that 12% return, or maybe without so much of appreciation, it's really 10%. Here are some of the things you might want to think about why some of your money should be there and not just in the stock market or, God forbid, crypto, which I don't understand. I'm just going to tell you right now, I don't understand what that's based on, or maybe some other investments that you might have. The first one is generally real estate has more stability and exceeds US inflation better than many other investments. And generally, real estate has more leverage than most other investments. And my favorite, and this is by far my favorite, your tenants are paying down your loan instrument, your mortgage, each and every month. That's somebody else paying your debts. How great is that? And lastly, the 12% return over the space of time is more predictable. And if you are buying in that 8 to 10-year range, that's what you should be looking at. That's buy and hold. That's not flip. That's not quick turns. I call that real estate speculation, which some people get kind of upset with me about, and yet that's okay. What we're looking for is long-term buy and hold returns that will help secure your retirement. So talking about real estate investing and property management has been my passion since 2002. I'll be making the worksheet that I showed you available in the notes below. No strings attached. There'll just be a link that you can go. You don't have to give your email. You don't have to give your phone number. You don't have to give any of that. If you want that sheet, just go ahead and click on that note there. And if you want to learn more about the real estate investing and the four benefits of real estate investing, watch the next video or look at the link in the notes below. Now, look, I'd love for you to subscribe to this channel so that you can get further REI education, or at least REI education through my eyes, a guy who's been doing this for about 24 years now. I would love for you to comment below with any of your questions or any of your concerns about what you've seen on here. And if you have another idea for a video you'd like to see, leave that in the comments below as well. I want you to know I do respond to those comments. And no matter where you are, I want you to know I can help you find the right real estate investor's agent, which is different than a house agent, and the right property manager. I work closely with property management companies and real estate investor agents in the following areas: the Northern Virginia area of Washington, D.C., Las Vegas. I mean, so many people ask me about Las Vegas. The New Orleans, Baton Rouge area, Charlotte, North Carolina, prettiest city in the spring I've ever seen. Springfield, Missouri, right down the road from us, about 3.5 hours. The Silicon Valley, Northeast Ohio, including Cleveland and Canton and Pensacola, Florida, and then the Texas areas of Abilene, Texas, and Houston, Texas. Folks, we are here to serve. I'm a firm believer that real estate investing should be a part of everybody's portfolio. And later, I can maybe even go into why I think everyone should have 3 quality rental properties on the day of their retirement.